Hello, everyone. I'm pleased to welcome you. Finally, the long-awaited time has come. I am starting my own YouTube channel dedicated to investments, trading, options, and speculation. I've dreamt about this for a long time, pondered it extensively, and now the time has come. I guarantee that this will be absolutely different from the majority of trading-related channels. There won't be any predictions here. Instead, there will be a clear and specific strategy. You can expect professionalism, and you'll see it. Let me start by introducing myself. I am an investor and trader with extensive experience. I've weathered many downturns, faced numerous crises, and I am a fund manager with many satisfied clients. It's time to share with a wider audience what I do and how the investment process, hedging, and real professionals work. I want to clarify up front that my channel is not for beginners. If you don't know what a stock, bond, or option is, you can still watch, but I won't be explaining the basics here. I'll focus on more advanced topics, and I'll do it differently. I have my own strategy that I've developed over a considerable period, and I continue to refine and improve it. I've been trading with it for a significant time, and it has proven its effectiveness in both bear and bull markets. I'll vouch for it, and I'll show the portfolio's performance in real time. You'll get insights into professional position management logic, similar to what the best hedge funds do. Currently, I manage the profiles of many investors, and I haven't let anyone down yet. Unfortunately, I can't show their portfolios due to confidentiality, but I'll demonstrate a test portfolio, a virtual account. I'll manage portfolio, and I guarantee that all the trades I execute on real accounts for my clients will be duplicated in the virtual account proportionally. This adds an extra layer of interest because you can't deposit or withdraw money here to manipulate statistics. It's transparent and can't be deceived. Some might argue that trading on a demo account is easier, and to some extent, I agree. However, I can't do it differently if someone is willing to share their account. Let's show it, but I understand that account information is mostly confidential. So what's my strategy? I have strategies for outperforming indices or specific stocks. Portfolio will aim to outperform the 500. To reiterate, my strategy involves systematic outperformance of the S&P 500. Currently, the statistics show an outperformance ranging from 3 to 50 annually. I won't aim for 50. WWET averaging 0.51 per month against the S&P 500 is my target. Some might say it's not much compared to the S&P 500's 12W, that I don't aim for 100 or 200. I don't know how to do that. I know how to outperform the S&P 500, and that's the main point. I don't make money. I outperform the S&P 500. Someone might ask, what's the difference? The difference is that if the S&P 500 corrects by, say, 50 EU, my portfolio will also dip perhaps by 30 or 20 I, thanks to the hedge, but it will decline. This means I don't make money. I can go into the negative, I can lose, and these are the facts. I focus on outperforming the index. That's it. What this says is that there are no guarantees that you will have more money because the index can drop and stay in a downturn for a long time. However, smart management, careful stock selection, and effective hedging allow for minimizing losses and starting to earn well when the index rebounds. Through outperforming the S&P 500, I won't fully disclose my strategies, but briefly, there will be no speculations. It involves holding high-quality stocks, including indices, for a long duration, according to Warren Buffett's principles. My advantage lies in selecting high-quality stocks, managing the portfolio, balancing it as needed, especially during economic cycles, and always staying invested. The key element is a well-thought-out hedge achieved primarily through options. I rarely use futures, but I'll discuss them later. In essence, I maintain delta neutrality. For example, if I have 70 Apple stocks, I buy long-dated put options with a delta of 70. It's a delta-neutral hedge, and I pay an average of 5 annually for it. But I always hedge this hedge with various strategies and positions. I want to emphasize that I don't predict market movements. I don't know where the market is headed. There won't be any forecasts. I focus on intelligent portfolio management. The crucial point is that if you can manage your portfolio intelligently, you don't care about price movements. People usually get nervous or overly excited, reacting to market ups and downs like addicts. That's not the case for me. Once again, no forecasts here. I don't know where the market is going. Later, I'll explain why no one can know where the market is going, but some still make money. It's solely due to risk management and portfolio management, which is precisely what I do. My professionalism is not about trading, predicting prices, or technical analysis, although I possess those skills. It's about portfolio risk management, nothing else. Again, my professional specialty is risk assessment. And it's only by eliminating risk that you can outperform and show higher returns than other investors. Yes, I don't engage in predicting price movements. I don't know where the index will go, but I assume based on macroeconomic factors. We work with probabilities. Therefore, 2024 will be a volatile year, and there's a probability of portfolio drawdowns. It will be interesting because everyone makes money in growing markets, but not everyone knows how to profit in a falling market. I believe we'll start this experiment in a challenging situation, and you'll see the advantages of this management. If you learn to manage risk, you'll truly become a free person. You won't care about forecasts. You'll stop watching all the channels drawing lines and predicting price movements. You'll operate with specific tasks. 500 grew by this much. Hedge it like this, sell these options. No emotions, just strategy. And it always works. Videos won't be frequent because I have nothing to say every day. I don't know how to predict prices, so there's nothing for me to say daily. Even every week isn't indicative. There are times when I lag behind the SIC 500 for a week or a month, but weeks and months aren't indicators. At least a quarter, preferably a year, that's when we assess the results. At the moment, the portfolio looks like this. I will start the new year with $100,000. We can take a look. I intentionally updated the account. It used to be over $1 million, but I decided that $1 million is too simple. It's a very large amount because the more capital you have, the more tools are available to you. $100,000 is a more interesting thing. I immediately say that I don't trade portfolios less than $10,000 because they simply don't fit my strategy. Yes, my strategy doesn't fit everyone because it will be very difficult to hedge, and there won't be much to hedge because there will be too few stocks. $100,000 is not a lot either, but we will start with a challenging task. As you can see, I updated the account. Some percentages have already been credited, but don't pay attention to them. In general, the starting point is $100,000. I emphasize that the strategy will involve smart selection and holding of stocks as well as intelligent management and hedging. During this time, the SILAP 500 has already grown a bit, and I haven't done anything yet, but that's not very important in principle. Our experiment will start on January 25. I trade with Interactive Brokers. In my opinion, it is one of the best brokers. I understand that many trade with Robinhood or other brokers. No judgment. Do as you wish, but I prefer to trade quietly. We will gradually form the portfolio. I won't be able to show you the actual portfolio because, again, the information is confidential. But here, the portfolio's return level will always be displayed. Again, we are outperforming the CP 500 and the NASDAQ. I will maintain a table for the portfolio. For the SIP 500, let's go through this portfolio. Let's break down this table. Initially, I thought of creating a big dashboard with many charts, but then I figured simpler is better, especially for future expansion. So this is where we start. January 9, 2024, the initial amount is rounded to $101,000. Why not $100,000? Numerically, it's $100,000, but that's not crucial. Next, the percentage growth or loss of the portfolio. Here we have the CAPF 500. What would happen if we invested all the money in the said 500? As we can see, I simply bought SPY at $471, totaling 214 ETF. January 25, 2024. The initial amount is rounded to $100,000. Why not $100,000? Numerically, it's $100,000, but that's not crucial. Next, the percentage growth or loss of the portfolio. Here we have the said 500. What would happen if we invested all the money in the set? As we can see, I simply bought SPY at $486, totaling 207 ETFs. Here, we extend. And as we can see, CP500 has already grown by 2. Let's see what happened with my portfolio. At the moment, the portfolio looks like this. I'll skip all the positions. I won't show how, as I mentioned before. It's been a few days. Let's quickly review the results for the week. Today is January 27, 2024. S&P 500 closed at our level $487. Let's immediately record it in the table. Here we extend. And as we can see, S&P 500 has already grown. Let's see what happened with my portfolio. At the moment, the portfolio looks like this. I'll skip all the positions. I won't show how, as I mentioned before. Let's focus only on the results. I want to emphasize, do not pay attention to short longs because I don't engage in shorting. I sell options for stocks and everything you see in the short category. Those are options sold by me, and I can sell both calls and puts. Calls I can sell to hedge the portfolio. In reality, that is my goal. I currently have no stocks in the account. My task is to acquire stocks, and this can be done in a profitable way through selling options. I don't directly trade stocks. I don't recommend this to anyone. Also, all my positions are systematically hedged. Let's look at the result. Let's move on to the table. Also, 1.8. Everything aligns here. Let's take another look at the portfolio balance. This is $102,800. We started with approximately the same amount. As you can see, the portfolio has already begun to grow, and here we are only forming the portfolio. Let's see. Starting to manage. Naturally, in the beginning, this is not indicative at all. In general, proper portfolio formation takes years, but we don't have that much time. I'll do it much faster since it's a demo account. You can take more risks here, so everything will be done faster here. But again, it should take some time. If you have any questions asked, don't hesitate. I will explain everything. Gradually, we will fill this channel with educational content, educational materials. I will gradually tell you how I do things. Subscribe. Sooner or later, we will get $1 million. Who has never seen how $1 million is earned from $100,000? You will see. See you in the next video.